Good morning, Jim. Was the Fed chairman enough to juice the markets for the next, say, 3 to 4 to 5, 6 months?
Well, I believe that, but I've believed that for the last few months as well, because I mean, we know they're getting frustrated about not being able to force the inflation that they want so much. And yesterday, it seemed like almost kind of the all-in moment. To me, I always liken it to the guy at the barbecue who's trying to light the coals, and he's sprayed lighter fluid on it a couple times, and finally he just empties the whole bottle on it. That's what I see when I hear these guys who are so frustrated about trying to control traditional inflation. Now, I have a lot of opinions about where they're pushing inflation into, and one of the things is what we're talking about right here, into risk assets. So that's one of the reasons I've liked stocks for months. That's one of the reasons I still like them now. I like gold and silver. I know they pulled back yesterday on the news, but that was just kind of a buy the rumor, sell the news thing. I think people had piled into those assets prior to it. We knew it was going to happen. It did happen. I think it's amazing that he's just saying, look, I'm all in trying to get inflation. And he knows he's got to. Pensions and anyone who has debt has to have this, or else it's not going to work.
I mean, we're looking at markets right now, 10-year break-even rates, 30-year break-even rates. In other words, where the market kind of is pricing in the inflation expectation for the next, say, 10 or 30 years in those government securities is minuscule. It shows that there's no inflation in sight, really. But that's not true for much of Main Street America. They're seeing prices for groceries go up. Fuel is now starting to creep higher again. Can we really say that there is no inflation out there, and is the Fed in a tough spot right now because of that?
Yes, they're in a tough spot. In no way can we say there's no inflation out there. What's happened over the last probably 30 years, I think it has something to do with the internet. The gauges that we use to measure inflation don't seem to work anymore. The Fed spends a bunch of time looking at Wonder Bread when things like Mike Trout baseball cards and bananas taped to a wall and all kinds of different things like odd assets are inflated unbelievably. So the way they're measuring it, I think, is completely wrong. I think this kind of mentality that we really need inflation is what's going to cause this whole bubble bust system like we've seen twice in the last 20 years.
Speaking of catalysts, and I mean, not bubbles in any way, I want to turn to the news of the day. I mean, we got reverberations in macro markets with rumors that Japanese Prime Minister Shinzo Abe was going to step down for health reasons. It was confirmed for the record this morning by himself. We saw dollar yen back in February at closer to 112. It's closer to 106 right now. The dollar is weakening. There's so many different cross currents right now. How important is the Japanese yen to the global macro picture?
Well, I think the irony of it is amazing the day after Jay Powell makes this huge commitment to inflation, because back in 2012, when Shinzo Abe took over and Abenomics, we knocked the yen down 35% against the dollar. So he was kind of one of the original orchestrators of these huge weak currency policies. So today we see the yen go higher on it. So I'm not positive that the yen's going higher because the most dovish prime minister is going to be stepping down, or the fact that there's a tiny bit of instability. Either way, it doesn't really matter. It just throws fuel to the fire. Our dollar's back on the lows. That little pullback in gold and silver is forgotten about from yesterday. So is it a big deal? Yeah, I think it's a big deal. And I guess if I had to put a point on what really the story is, I think the yen's rallying because we're removing one of the more dovish prime ministers that we've seen in a long time.
How much of that is also dollar weakness? We've seen that as a trend so far this year.
Sure. And I think that's going to continue. The federal government with its spending, the Federal Reserve with its accommodation, they've made it clear that they will throw anything they have in their toolkit at the problem we have. And they've been knocking down the dollar quite a bit so far, with the dollar's down probably about 8 or 9% since back in March alone. I think that's an enormous deal, and I think that continues. I want to see us break the lows from last week in the dollar. But again, this has been the thesis of my whole, the almost buy everything trade. I guess it's the David Tepper trade too. But long gold, long silver, long stocks. This is all predicated on the fact that the Fed and the federal government want to knock the dollar down.
All right, just about 10 seconds left here. Do we continue to make record highs into the year end?
I think so. I think 3,600 is my near-term target within the next, let's call it 2 weeks. I guess 100 points is nothing right now, but I definitely believe we are headed higher right now, and there's nothing that I see on the horizon that necessarily is going to change my mind on the near or medium term.